The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 10th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, let's take a look at the empowering beliefs brought to us by none other than Mr. Tom O'Brien. You know, each day he says what you think about, you bring about, and what you focus on grows. And in my opinion, I couldn't agree more. I couldn't agree more. Let's just leave it there. But you see, what I've done is I've broken that down into 6 easy steps. 6 easy steps. I want you to try this. If you have not already, I've shared this before, but I'd like you to try this for 30 days. And the reason is because it could absolutely change your life. Now, maybe you say your life does need changing out here. Look, we're always striving for more, and so this is what you do. These are the 6 steps. Number 1, you write down on a card, memo pad, and I say use a memo pad, use that phone of yours, and write down, first, actually, the exercise, just do it on a piece of paper. Then you kind of summarize everything. But step number 1, no matter what, is write down what you want more than anything. Now, it's usually going to be more things or what have you, but, write down as many as you can. Then go circle the top 5, and then focus in on the thing that you really, really want. The one single outcome that is just simply clearly defined. That's step 1. Now, step number 2, don't show it to anyone. Don't show it to any person out there. Instead, I want you to carry it with you, and if you've got it on your phone, I want you to carry it with you so you can look at it several times a day. Like if you don't use a phone or you don't want to do it there, put it in your wallet and pull out your wallet every time you pay for something. Every time you pull out a credit card or you pull out a dollar bill out there, I want you to pull that out as well and take a look at it. Step number 3, always think about it in a cheerful, in a relaxed, in a positive way each morning when you wake. So make that part of your ritual, the very first thing that you do before you step out of bed. I want you to think about that outcome, that clearly defined outcome that you want. I want you to think about it in a cheerful, in a relaxed, in an extremely positive way out there. Step number 4, before you go to sleep at night, that's right, you're going to look at it again. And as you look at it, I want you to remember that you must become what it is that you think about. Whatever it is that is your outcome, who is the person that you have to become in order to attain that? I want you to use your imagination. After all, it is the strongest nation on this planet. Number 5, and this is the difficult part, I want you to stop thinking about what it is that you're afraid of. Fear, nothing more than false evidence appearing real out there. Each time a fearful or negative thought comes into your consciousness, replace it with that mental picture of your positive and worthwhile outcome. Replace it with that person that you need to become. That's how you get rid of the fear out there. And number 6, finally, step number 6, each day during this 30-day period, always do more than you have to do. Each day there's got to be some type of action out there. And you know Stevie's thoughts on action. That's right. Little action is going to get you no results. Massive action, that's what gets you results. Take control of your mind, knowing that your returns are going to be in direct proportion to what you give. Yes, folks, our fearless leader out there, and I do mean fearless leader, he says it best. What you think about, you bring about, and what you focus on grows. And that is the formula for that exact principle. Well, let's go check out the fear in the marketplace. There's no fear in the marketplace. Actually, we got a little bit of, we got the fight between the bulls and the bears. That means we've got the fight going on between the Dow and the S&P 500, and it's the Dow and the S&P 500. They're taking on the NASDAQ Composite and the Russell 2000. We're going to find out who is going to win that battle out here. Right now, the Dow is up 8 points. The S&P is down 2. The Composite's off 26 points, about 0.6%. Russell 2000 off 0.5%, down 5 points right now, trading out 11.53. NDX 100 off 23 points, trading down 0.6%. New York Stock Exchange slightly in the red out here. It's off 7 points. We've got Semiconductor index is basically flat out here. Goldilocks up $14, running all kinds of resistance. It's at the 13 to 20 level. Silver up 40 cents, trading at 20.17. It too has some resistance ahead. Let's see, moving the markets here to the upside. Leading the charge is Intuitive Surgical. That's Psycho stock. It's only up $2.50 out there. Cash America International. That's up 8%. Westco International. A lot of internationals out here. WCC is a ticker symbol. They're up 3%. iGate Corp, IGTE. No, they were out with numbers before the bell. That's up 9% this morning. IBM up 1%, up $2. Shire PLC up $2. Titan Machinery up $1.76. Kimberly Clark up $1.41. To the downside, Imperva. IMPV down 40%. Let's go take a look at that here. Priceline is off $12. Google's off $11. Biogen BIIB down 10. Regeneron Pharmaceuticals off 7. You've got the biotech continuing to get smacked around. PriceSmart PSMT that is off $6, off 6% this morning. VIP Shop Holdings that seems to be up and down every single day. It's off 4%, down $6 right now. Jazz Pharmaceuticals, JAZZ, off $5. Our call number is 877-927-6648. Give me a call, folks. Let's start off by taking a look at some of these stocks here that actually are really dropping. Let's go take a look at this one here. Actually, we have percentage-wise. Let's take a look at two of them. Let's take a look at Imperva, IMPV. First, we've got to find out what Imperva does. So let's put up IMPV. Then we'll go take a look and see what Imperva actually does out here. Oof. Man, what it is not doing is something that's bullish. This thing is down with some big volume out here. Well below a couple of, most recently a sign of strength out here. Does not look good. This is an IPO. Looks like it's headed all the way back down to the IPO date from November of 2011. So let me see here. Company profile. See if I can load that up on my screen here. They develop, market, sell services, and support data security solutions that protect high-value applications and data assets in virtual data centers. Didn't I hear something this morning about some bug that's out there? Looks like they're struggling to provide good service out here. Let me see. What is it? Their revenue. Looks like they were out with numbers here, but look, let's just take a look at what it's done out here. Pretty nasty when you take a look at this thing. First of all, it wasn't too long ago, which was March the 6th, so only 30 days ago. 30 calendar-ish days, made a high of $67. It's trading at $29 right now. Folks, there is a reason that we use stops out here, and those stops likely inside this stock would have gotten you taken out. Look, even if you had used a 10% stop, let's just say you used a 10% trailing stop on something. This was at $67.12. 10%, $6.70 out there? I would say somewhere around, let's just use, we'll round it to higher than 10%, $7. At $60, you would have been out of this equity, right? If you used a trailing stop like that. Would that have saved you? Yeah, because you would have been down at the $60 range. Looks like on March 26th, as you had a wide-ranging bar moving down to the downside, 481,000 shares taking out 338, taking out a B point of an A to B equals CD to the downside. So, whatever your investing philosophy is or isn't, along with your thoughts on the market, please use some kind of stop out there. And that way you can avoid, or you can do everything you can to avoid the type of pain that this equity here and every shareholder inside this thing is going to undergo out here. And very likely this is going to run all the way down into the $23-ish area. Just absolutely being blown apart here this morning. That is on Imperva. Let's see, what else do we have that is moving percentage-wise? Anything big percentage-wise to the downside here? I've actually got it based on, my look here is based on point losers. I'm just going to leave it on point losers. But let's take a look at the Biogen, BIIB. So here's, we know that this sector is getting just pummeled. And let's go to, and BIIB is has been one of the better equities out here. Let's go see what its nervous Nelly breakdown is doing. So it's trading out now. It's trying to take on a recent swing point low. That's April 7th. That low is at 281.59. Volume on that trading session, 2.4 million shares. Today so far it's pulled back with 466,000 shares. That is not a good sign for the biotech sector because it's moving into that swing point, not like it really moved out of it. It moved out of it slightly yesterday, but it looks like it's going to take on that area. Now what it is doing here, it is finding some type of support at its most recent sign of strength. And that may be where Biogen is really headed to. Now, that sign of strength took place on November 21st when it gapped up with 4.7 million shares. Wide price spread, accelerated volume all the way. That wide price spread, meaning if we took a look at the open of November 21st, or the close of November 21st, what I should say, 252.43. So it had nice wide range, nice gap in there. And again, that gap, you always want to fill in those gaps. And what I mean by filling those gaps, I don't mean gaps get filled in, because when you take a look at that trading session out there, if I can find the gosh darn thing, here we go. If you just simply went ahead and you created, because this is really the bar that was formed out there when this thing gapped up. Let's just change this color to that nice little greenish color out here. And that's really the bar that took place. Of course, a different green, but that's really the bar that took place on that gap up. So nice wide-ranging bar. Sometimes you see those gaps. They should not have you afraid. In fact, in this case here, inside of Biogen, it gapped up with 4.7 million shares and came back and was closing slightly in that gap with lighter volume, 1.1 million shares for the most part. But it does look like at this stage here that now price is going to come all the way back down to that sign of strength out here. So you may be able to take a look at putting on your shopping list here, BIB, assuming that it can come into that area on less than, you'd like to see it come in, well, ideally with less than 1.3 million shares, but your benchmark is going to be 4.7. Now, this is always going to have some resistance that it's got to deal with, and that's the volume off of the highs out here, and that's the nasty thing about Biogen, because if you take a look at it, you're talking about one heck of a run. When I mean one heck of a run, first of all, if you went back to 2009, so let's do that. The lows there were $43. So this went from $43 to $370 out there. And it actually made a high on March 19th, and it made that high with 1.3 million shares. And when it came off of the high, which is what it did on March 21st, it blew apart 5.7 million shares to the downside. So, you can't, there's no better institutional selling than that. So, you could, in one sense, you could say, okay, it was moving higher on light volume, and that was distribution that you saw inside of Biogen, and then boom, unloaded with the large institutional selling. So it's going to always have some resistance here at the 313 type level out there. So that's on Biogen. Let's go take a look here at some things that are moving to the upside. We'll take a look at the indexes, the ETF structures, after we get back from this first breakout here. But let's take a look at iGate real quickly. IGTE, that's up a nice 10% this morning. Let's go see what it is doing. So this thing is gapping up. This is gapping up into here. So this is going to find some resistance. This is gapping up into some institutional selling, is what it looks like from January 16th out there when it had volume off of its highs. 1.6 million shares. Today, though, up with 176,000 shares. This is going to find some resistance, most likely at about $39.42 to the $37.79 area. Right now, we got the Dow off 12, S&P down 5, Composite pulling the market down off 39 points. Be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 4 points. S&P off about 4 as well. How about that euro out there? You know, it is only the early part of the month out here, April the 10th. But let's take a look at the monthly chart here for the euro, see what it has been attempting to do. Now, we'll take a look at the monthly, take a look at the weekly, take a look at the daily, just simply to give you an idea as to what's going on here. And it's really an important, April's going to be another important month here for the euro. Now, what's on my chart, if you're watching this on Tiger TV, monthly chart here, you can see the black diagonal line. Well, so first of all, number one, you see a number of different lines going across my screen out here. All those horizontal lines, those are the primary trading range boundary lines out there. And if you'd like to learn more about primary trading ranges, Bud Rolfs has got a workshop that's coming this Saturday. All the details on the homepage at TFN.com. We've got a Tiger Dollar promotion. You know, we do it just a couple times a year. So you can go buy Tiger Dollars. Not only can you use that towards Bud's workshop, you can use it towards all of our newsletters out there. If you'd like to test drive Mastering Probability, now is a great time to do that. You've got Tom's free workshop that's got, I think it's 6 hours, that comes along with buying Tiger Dollars out here. So really great value at the homepage of TFNN.com. The diagonal lines we're looking at on my screen here, that happens to be a trend line and a descending price channel. Now, the descending price channel on the monthly chart, the euro has broken out of that level. So it broke out of that. This is the red diagonal line that you see on my screen here. The trend line is what the euro now is trying to get above. And it did that. It tried to do that. And you can see it was rejected last month. That's this. I'll blow this up on my screen out here. And that is this little candle. Now, it's not a bearish reversal signal whatsoever. What the euro is up above on a monthly basis, it's up against any kind of resistance. This candle right back here in the month of February 2013, that was a bearish engulfing candle. Had a little bit of follow-through on the very next trading month out there, and that became resistance. How do I know it was resistance? Well, the first time up that level was tested was back in October of 2013, and it held. Then we saw a little bit of a break above it here in December of 2013, back below, back above. We saw another test of it here last month where it tried to actually break the trend line and get back and test that horizontal. Now support level, old resistance becomes support. You can see it's even held as support as we speak right now. And if the euro, in the month of, what are we in? We're in April. In the month of April, long time to go, but in the month of April, if the euro breaks through this, guess what it says? Now, the euro is the largest weighting structure inside of the U.S. dollar index. 53, 54, 55, 56%, somewhere in that range. I don't have that one totally memorized, but it's in the 50, it's north of 50 out there as far as the weighting structure. And so this is communicating to us what the euro is trying to do, and we won't know this on the monthly chart till it's done, is trying to break above long-term resistance. This goes back to 2008, folks. So if it breaks above that, what does it mean? It says that the euro will want to go travel up to 1.4421 at a minimum, because I can easily make the case that 1.4421 is not where the euro will stop. That instead the euro will move all the way up to 1.4872 out there. Now, what would that do? That would strengthen the euro. That would put weakness inside the U.S. dollar index. Unfortunately, that's not the only currency pair out there. So you've got to compare, because you've got the Canadian dollar, you've got the yen, you've got the pound, you've got the, what do we got? The Swiss franc, and, what's the other one out there? I don't know why I couldn't remember it, but I'll remember it here. So that's what's going on the monthly chart. Let's take a look at what's going on the weekly chart here for the euro-U.S. dollar. On the weekly chart, what we're going to see here is the weekly chart is already broken above. That was the week of March 7th. It broke above the trend line. Stayed above it the week of March 14th. Came back and it got back inside it here on March 21st. So here's where it came back inside. And this week now again, and at this stage here, it's Thursday. Nice wide-ranging bar coming out of here. Back above both horizontal resistance, diagonal resistance here, and the weekly chart giving us a pretty good indication that it wants to move higher out here. Now, on my chart here, you'll see some yellow rectangular square type boxes. The euro has a pattern. I can't tell you why it has a pattern, but right around the beginning of the year, that's anywhere from the December to February time frame, and this study goes back a long ways, folks, and right around that time frame, it makes a significant high or low set of swing points out here. And at this stage, I have to give what it is that I'm seeing out, and it's failed once in like the last 15 years out there. Now, you might say 15 years is not a good enough sample size out here. Well, it looks like more than 15 years is really what I've got. Let's say it's failed once in the last 20 years out here. That's pretty good. That's a pretty good pattern out there. That's one where if you want a master problem. And at this stage here, I've got to give the advance to the bulls. It says that the euro wants higher price out there. Interesting. Right now, the Dow is up 2, S&P is back 3. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 8, S&P is down 3. I mentioned earlier that the real battle is on between the Dow and S&P versus the Russell and the NASDAQ composite out here, NDX 100 as well. Let's start off, take a look at the VIX index here. Currently priced out at 1382. 50-day exponential moving average on this is at 1457. You're traveling below that. Says that there's liquidity in the marketplace. As long as there's liquidity in the marketplace, the markets can fend off any attack that the bears try to assemble out here. And so at this stage, the VIX index is saying that the bears will fail out here. Now, the VIX gets above 1457, and that changes the tune. So it's not exactly like it's that far away from there, but right now trading below the 50-day exponential moving average, and that says liquidity inside the marketplace. Now, let's take a look at some short-term charts. So let's take a look at a number of different time frame charts. So let me go ahead. Let's put up the we'll take a look at the battle that's going on. But let's first look at the battles on the 120-minute charts. Now, this is the ES Mini out here. And the ES Mini, this guy gave us a beautiful price relative strength divergent pattern. Remember, trends are going to change quicker on the 120 than on the daily versus the weekly and the monthly out there. And so it's one of the reasons why whatever trading time frame it is that you're looking at, why you want to be paying attention to what's going on, at least one level up and one level down. So let's assume you were trading, making decisions on the daily charts out here. What's it saying on the 120-minute chart? Well, on 120-minute chart here for the ES Mini, it's saying that you had a nice bullish pattern, reversal pattern out here. It confirmed with bullish bars. It confirmed with a lagging EMA, exponential moving average cross out there. And now that's acting as a support level. Yeah, we know where the bears are camped out. That's easy to define. You know, they started taking their bearish positions about 1867. So that's a level that we want to be paying attention to. You see price get above 1867. That sets up a move much higher, probably all the way back up to the potentially the 1892 area out here. Now, can the bears go ahead and take charge and push lower? Yeah, but is this a place to be going short out here? Only if you were trying to sell the top tick or top tickish area, if you really felt strongly, if you're really that but I'd say, hey, wait a minute here. You know, you got that you got the VIX below the 50-day. That's not giving you a message out there that the bulls are ready to just fold their tent and to give in. In any event, so the ES Mini here, if we take a look at the 120-minute time frame, it is in a nice little bullish retracement rally, whatever you want to say. It's in a mode that wants to move further north out here. If we take a look on the daily charts out here, we're going to see nothing more than an upper level consolidation. Let me put the crosshairs out here. Just simply consolidating out here, and until the lows of that consolidation, which we'll call about the 1823-ish level, are taken out, all that it's in is just simply consolidation. The upper part of the consolidation, that happens to be, we'll call it the high of the March 7th candle session, 1887.50. So 1887.50 on a daily chart suggests that that's going to be some strong resistance. A break above that would be a very bullish, very positive mode. But on the daily chart here for the ES Mini, it's not giving us any kind of sell signal, not one that Stevie can see out here. And then, of course, if we switch over to that's the daily already. If we take a look at the weekly chart, what did I do? Okay, here's the weekly chart. The weekly chart, I don't have much in the way of data out here on there. That's too bad. I can overcome that. Did have a little shooting star last month. Weekly, I'm sorry, last week. We're not getting any follow-through as we speak right now. As of Thursday, follow-through would mean lower price. We have not seen that. That does not mean that the resistance level of that shooting star is a problem. It just means you haven't had follow-through this week. And the chart pattern that we're looking at on the weekly basis, there's going to, quite frankly, and we're already, Thursday, it's 10:38. There's nothing bearish about this weekly chart. Yes, it has made a price relative strength divergent pattern, but that's just a signal. That's all that it is. There's nothing bearish on the weekly chart. Now, let's go take a look at the Dow. So we'll do this one by one, and I'm going to stick with the futures because I can fill in all the blanks. It's a whole lot easier to do that. So let's take a look at the. So now we get down to the bearish side. We're going to see, the bearish message that it is sending to us. So here's the daily chart now so we'll start with the daily on the Dow. Now there on the daily chart is really nothing bearish. It does not have really a buy signal. It would generate a buy signal if it got across this, closed above this high from the trading session of April 7th. That high is 16,363. You're traveling at 16,360 right now. But a close above 16,363, and yesterday was, what was that? Yesterday was a close of 16,360. So a close above that would say that, you know what, price is going to go up and test the highs out here, which is a high volume bar. So it really should test that area, which would say get up to about the 16,574-ish type mark out there. So that's what the daily chart. Let me go put the 120-minute time frame up on our screen here. Let's switch that over. Let's take a look at the Dow futures. Let's go see what they are doing. Then we'll go take a look at the NASDAQ. We'll take a look at the Russell, and you'll clearly see the fight between the two. I can't tell you who's going to win out here, and just tell you what it is that we would have that is going on. So as we take a look at the Dow chart here for the Dow futures, 120-minute time frame, again, nice little price relative strength divergent pattern. We got the bullish reversal signal. That took place at 12 noon. That was on April the 8th out there. So a nice little bullish crossover that took place here at about 10 o'clock in the morning. That was yesterday. We've seen the bears try to push price down, but not been able to get through the support line out here, which is about the 16,330-ish mark as we speak right now. So this is so we have the daily that looks is neutral to bullish. We've got the 120-minute chart that is still bullish out here, not giving any sell signal as we speak. And the weekly chart, I didn't do the weekly chart today. Let me go back. Let's do the weekly chart out here and see what its message is. There we go. Let's take a look at the weekly time frame. Of course, the weekly time frame is probably going to say to us bullish, I would imagine. But let's put this up on the screen. Yeah. It, too, formed a little shooting star last week, but, not really, no follow through to the downside. Just a upper-level consolidation that is going on out there in the marketplace. Now, let's take a look at the NASDAQ. Let's take a look at the NQ. Let's start off with the monthly chart out here. So on the monthly chart, let's go see what the candle signals have been the past couple of weeks and where we're at. And what we're going to find here on the monthly chart for the NASDAQ is, it still is in bullish mode out here. It's got support. It needs to break this little bull sash candle from February, it's a weekly chart we're looking at. My apology, the week of February 7th, and that low is 34.12. You break below that, that would be a problem. But still, this is it's in a caution zone, so it's not where I'd say go out and buy it or anything, and is giving sellish type of signals out here, but still on the weekly chart. And in order now for the NASDAQ to give us a sell signal, at least from my standpoint, you need to see it close above last week's high, 36.69. So it's got its work cut out for us. It's trading right now at the 35.55 level. So that would then give me a signal to say on a weekly basis that, okay, the selling to the downside has subsided. On the daily time frame out here, daily time frame, a little bit different story. The daily time frame clearly shows that sellers are still in control out here. These little green boxes, these little Rhodes momentum indicators on the daily chart, they're telling us that that sellers are still in control. And we've seen resistance up at this level here, about the 35, 85-ish type range out here. So this is where you've got the clear selling, bearish overtone messages coming from the NASDAQ on the daily, cautionary zone on the weekly. Now let's go take a look at that 120-minute time frame chart out here and see what kind of damage has been done here this morning. See if that has now reversed and given us a bearish type of a signal out here. And as we speak right now, even though it's identified as red, this candle session does not close until 12 noon. The answer is no. It is not really, other than selling pressure, it has not given us any kind of message, not a message that I would take that say, hey, go short the NASDAQ. Out here. In fact, if anything, right now, price is just simply coming back to where it broke out at 2 o'clock yesterday. The low of 4 o'clock yesterday during the 2 to 4 o'clock session out here. And the low of that is 35.54.50 out here. And I'm not saying if it closes below that the NASDAQ is going to throw the cards in. But as we speak here right now, just a little bit of a warning shot across the bow. And and it's the NASDAQ has let us down. So if we're going to see a sell signal, if we're going to see the NASDAQ continue its roll now, and it was just a couple of days relief rally, always a possibility. We'll see this chart here give us the bearish signals first. Well, actually, you'd see it in the 30-minute or the 60-minute chart before you'd see it in the 120-minute. But we're just trying to take a little bit larger time frame view as to what's going on. Now, let's switch over to the Russell 2000. Now, when I switch to the Russell, it's going to have a 10-minute delay there because I just don't feel like paying the extra dollars to have the live feed on that. So, but the 10-minute delay is just fine. It's just fine for us. So you've got the in here in the Russell 2000. This actually is not. So it's trading at 1148 in the futures contract. So maybe it's a little bit lower than that. This has absolutely not given us any kind of signal that even the sellers are in control of the Russell. Yeah, a little bit of pressure, off 7 points or so, but no message here. No message. So actually on the 120-minute time frame chart out here, this still says that it can move higher out there. That's on the 120. Let's go take a look at the daily chart. Different picture out here on that larger time frame. But let's take a look and see what the message is here inside the Russell on the daily time frame. And it's going to look very similar to the NQ. Now, in the case of the Russell, doesn't have as much selling pressure as the NASDAQ, but what it has done, it's run into that resistance at the 1158 area. The actual high so far intra-session here today has been 1157.50. Now, that 1158 area is what it needs to get above to start indicating that there would be more of a bounce inside of the marketplace out here. So that's on the daily. Let's take a look at the weekly chart here for the Russell. That'll round things out as we take a look at it, and that's as a 10:45 on terrific Tuesday out here. Oh, I've got the current contract out here, and on the weekly, that is not going to be enough information. Let me just switch over here real quickly to the continuous contract, and there we go. And on the continuous contract here, inside of the Russell, it's not really giving us a bearish signal whatsoever on the weekly. Caution, yes, but a bearish signal, no, the answer is no. So that's what's going on there. Let's go take a look at the ETF structures here. Let's go see what we've got going on there. Let's take a look at the Qs, the IWM, the SPYs. Let's put this on the daily time frame out here for right now. If we take a look at the let's take a look at the IWM, since we just talked about that. Right now it's trading at 113.96. Made a high yesterday with volume, light volume, 42 million shares. Trading pulling back here this morning with 11 million shares. You can see this is clearly identified a descending price channel. So in order for the market to really move higher, in order for there to be any kind of rally, what you would see here is you would see the IWM break this descending price channel, and that's not the case. If it's going to push lower, expect it to find support down at the bottom of that price channel. If it's going to move higher, expect it to find resistance at the top of the descending price channel out here. At this stage right now, at the moment, no real identification as to what it really wants to do here as we speak today. But there's the price channel that I would be looking at. If we take a look at the Qs, we're going to see a similar price channel out here. Yesterday, moving higher, light-ish volume, 45 million shares. Of course, we know that's going against a high volume move down. That was on April 4th, 131 million shares. Yesterday, made the 0.618 retracement level at 87.87. So far, the volume here this morning, 14 million shares to the downside. I don't need that black line there. Same scenario here. If this thing is going to move higher, the market is not going to, any breakout will not occur unless the Qs here were able to break through its descending price channel. If it and if it does that, then that changes I think the entire complex with regard to the fight between the bulls and the bears out there. If in fact, and so it's made the 0.618 retracement, pulling back here this morning. This ought to find support down at the bottom of the descending price channel and resistance up at the high of it. We go take a look at the Dow. The diamonds out here, they're trading out at 163.78. Now, what the diamonds did here yesterday, and they're still doing here this morning as we speak, they traded into the swing point high from April the 4th out here. That had 10 million shares. They got in there with volume yesterday of only 6 million shares. So, 40% lighter inside of the Dow diamonds. It's still trading inside there. Rejection today would be a close back below 163.58. If it closes above 163.58, what you can expect is a test of the highs out there at the 166.06, a high volume high inside of the Dow diamonds. If we take a look at the SPYs, just to round this out here, the SPYs here yesterday or today here this morning, getting very close to the 0.618 retracement level. That is the 187.37 range. So far today, the high has been 187.17. Moved higher yesterday with, lightest volume, 100 million shares going into 169 million shares out there. The markets could easily be forming a little A to B, a little B to a C of an A to B equals C to F in order to take the SPYs to the top of the consolidation box in the 189-ish level. Right now, the Dow's off 37, S&P is off 7. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 39, S&P down 8. Let's go check out the market profile. So we were really looking at the futures contracts out there. Let's go take a look at the market profiles here. Let's take a look at where the weakness is coming from as we speak right now. And that's in the NASDAQ, in the NQ. So we're going to take a look at the 120-minute time frame chart first. And right now we can see that price is pulling back into a very strong congestion area. Could be a very strong support level. Happens to be this little yellow line going across my screen, which is just below the level of support, the so-called unfair low out here, and that is at 35.41. So the NASDAQ ought to find support anywhere between 35. Looks like that's about 35.37 to 35.41. If it breaks that area, then on the 120-minute time frame, what will happen is it will have gone ahead and broken through an area of support, and that'll open up the door to move down to the 34. I would have to say about the 34.95 to maybe 34.64 range. It will have. Well, we'll take a look and see what the daily charts show. But right now, what you've got the Nasdaq doing, trading right into a congestion area, point of control, kind of where the bulls are kind of lurking, holding out, taking a look at, and saying, "Hey, I don't think so, not so fast, baby." And so that's what we're looking at. That's what I'd be looking at on the 120-minute chart. Whether you would be long or short. On the daily chart, so the number to be paying attention to is going to be the 34.8785 out there. So that'll be the key number on the daily. You break below that, and on the longer-term picture, that's where you all of a sudden see a bunch of selling. So the weak element inside the market right now, where the selling pressure is coming from, is the Nasdaq, and on the 120-minute chart, it has not broken through a support level out there, at least according to its market profile as we speak right now. If we take a look at the Russell 2000, again, remember this 10-minute delay out here, so I know there's a little more pressure on the Russell than we are taking a look at right now. 1141 is its number on the 120-minute time frame chart out here. So at 1141, oops, let me do this here. Let me blow it up this way. So 1120 is on the daily chart out here. So 1121, we'll call it on the daily chart. But on the 120-minute time frame, so we're taking a look at what's going on here with regard to selling pressure. You get below 1141 on a 120-minute time frame bar. That means it's got to close out there. Then that would open up the floodgates, but there should be pretty good support. The bulls should be lurking. They should be hanging out right in that 1141 area if they are still around. If they are out at the in Augusta at the Masters, walking the grounds, and those are beautiful hallowed grounds. If you've never done that, you ought to put that one on your bucket list. In my opinion, the Masters and the is perhaps one of the best places you can go to watch a golf tournament from. You got the Masters. The TPC is pretty good as well out there, but there's nothing like walking the grounds of Augusta out there. So those are the numbers inside of the Russell. Those are the numbers inside of the weakness out here. If we take a look at the ES Mini, so now we're back to most certainly a live updated charts out here. That has quite a ways to go just to get down to the old resistance, which should be new support. And that's at 1854. And again, this is the 120-minute time frame that we are looking at. It gets back into the 1854 range, and then you'd have to say staying bullish would you'd at least be tightening your stops at that stage if you had taken a long position or what have you. But right now, there's where the battle's going on again between the ES Mini, the S&P, and the Dow versus the Russell and the Nasdaq. I can't tell you which one is going to win. What I can tell you is that the S&P futures is coming down into support, just as the Nasdaq is coming into support as well. Folks, stay tuned. Our man Basil Chapman is up next. After Basil, it is Terrific Thursday. It's Larry Pesavento. It's Daryl Martin, David White, Andy Heck. We got the whole troops, all the troops out here in the Tom O'Brien Show from 4 to 6. Have a great Thursday, folks. Look forward to seeing you in the morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.